Doing a quick little scope here in the car. Again, got my cup of coffee here. What's going on? Yeah, some of you are coming in. Ooh, I like that. I put in New Year's and I get a whole bunch of 2016s. Didn't even know that was going to happen. Oh, that's awesome. Look at those babies fly. Kick them up. Tap the screen. Let me see the 2016. It's like fireworks. That's beautiful. Amazing. Look at that. So put the hashtag in there for New Year's, and I guess that's what we get. Nothing for tax tips, though. Oh, that's awesome. Those hearts are beautiful. Can you guys see in the background, too? Right back there? It's snow. It's our first snow in, we're in 2015, December 30th? Today the 30th? I think so. Yeah. Hey, from Nashville, what's going on? Yeah, a lot of you are tuning in just now, which is great. Hey, from Birmingham, England. Yeah, New Year's, that's the tag. It's 83 here in Clearwater. Nice, good for you. Val, New Year. Awesome. Hey, Val, what's going on? Yeah, so I wanted to discuss, I did a podcast episode, let's see, when was it? It was Monday. It aired with a CPA, and with that CPA, Josh Bowerly, he actually went ahead and gave us some tips as far as from a CPA, as far as what we can do for our businesses. Val, it's cold, huh? Hey, from Dallas. I'm doing well, Francis. Yeah. So that episode was just aired on Monday. So if you go to theamazingseller.com, you'll see it'll be the second post. There was one post today, which was the top 10 episodes from 2015. So if you're at all curious and you want to go check them out, by all means do that. We've had a lot of great guests, a lot of great episodes, over 140 now currently, which is amazing. So I appreciate it. If you guys are just tuning in, and you're maybe tuning in from someone sharing this or referring this to you, we basically talk about selling on Amazon. I have a blog and a podcast called The Amazing Seller. And yeah, there's a ton of information there. And 2015 has been just awesome all the way around. And Amazon business, I'm over the 300,000 mark for 2015, which is amazing. Right now, actually, my sales are even up more than fourth quarter, which is amazing. I think yesterday we capped out at about 85 units on the one brand, and then there's another brand that I'm working on now that's in its beginning stages, and we're doing about 18 to 30 a day with two products. So that's exciting. So over 100 units a day that's being generated through two brands, which is amazing. So you're probably tuning in for those tax tips. If you guys are in business for yourself, you get the opportunity to write things off. Am I a tax draver? No. I'm not. I am actually someone that is a business owner that knows that I have things that I can write off in my business that are business expenses. Now, as you start to make more money, these are going to become even more important, because the more money you make, generally, depending on where you live, you're going to be paying more. Now, I know Florida has no state tax, which is crazy, but we do have state tax, and here in New York, and that benefits us there as well. So anytime that you're doing anything for your business, you can write that off. Now, some people say, Scott, if I don't have a business technically, but I'm starting a business and I'm spending money for that business, is that still a write-off? And the answer is yes. I'm not. Again, let me a little disclaimer here. I'm not an accountant or an attorney or any of that stuff, so I can't give you legal advice. But all I can say is that I've been writing off things in my business, whether I'm just doing a little eBay business on the side and I'm spending money and then I'm making money, then yes, you're able to write off those business expenses. So I'm going to give you 3 things to consider. And the reason why I'm doing this right now too, and the reason why I wanted to do that podcast on Monday is because if you do anything for your business between now and December 31st, midnight, or 11:59 p.m. Eastern or Pacific, you will get to write that off. You can have your accountant write that off for you. So there's all different things. There's tons of different things. Like, literally, if you're buying something that you believe and feel your business is, benefiting from, then you want to write that off. So just a couple of tips, okay? And these are 3, but if you want a bunch of tips, go over to the podcast, theamazingseller.com. Go there. It's the second one on the first page right now. I forget the exact number of that episode. I should know that. I should have knew that beforehand, but that's just how prepared I am here. Sitting in the car, once again, not driving. I am sitting, I'm parked. You can see I'm parked. I hope you can. Yeah. I'm at my son's school, and we are 143. Thank you very much. That's why I love you guys. You guys help me stay on track here. So episode 143 was the one I did with the CPA, Josh Bowerly, which he talks about business entities too. So if you guys want to know about what type of business to form, an LLC, an S Corp, a C Corp, any of that stuff, definitely check that out. He goes over that stuff in detail. And then also some tax tips, what to use for write-offs, what you can, what you can't, and those types of things. So yeah, you definitely owe it to yourself to do whatever you can to take your write-offs. They're coming to you. But if you don't know about them, then you won't know to, write them off. So you'll lose that money. So for example, if you're in a, you were listening to 143 while getting the Periscope notification, that's funny. So if you're, yeah, see how I lose that train of thought just from that one little comment that came in? Forgot what I was talking about. But if you have that stuff, hey, from Paris, if you have this stuff for your business that you're doing business, you have it coming to you. So why not write it off for the business, right? And take that. So, here it is. So for example, if you're in the 28% bracket, okay, 28% tax bracket, that is. And as the more money you make, that will increase in different stages and different brackets, like up to 100 grand, up to 300 grand, up to 500 grand. It just keeps going up. You can get up to the 40%, bracket. So for example, if you're in the 28% tax bracket and you make $1,000, the government's going to take about 28%. Okay. Not just the government, but you got Social Security, that's the government, and you got the IRS tax, and then you also have your state tax if you're included in that, which I am. So, but let's just say across the board you're at 28-30%. So for every $1,000 you make, $300 if you're 30% is going to go to the government. Okay, which I'm not saying that government shouldn't get money to help run our country. I get that, but if I'm taking and I'm buying something for my business, or I have an expense for the business, then every $1,000 that I can show, it's like getting $300 back in my own pocket, right? So that's something that you want to consider, okay? So I wrote down my little cheat sheet here. So number one tip, you ready for this? Hire an accountant. So many people do their own taxes. Now, unless you're an accountant, or unless you know an accountant, you should be having an accountant do your business taxes. Bottom line, okay? And I don't mean like H&R Block or any of those big brand, kind of walk in and get them done. I think you should have your own accountant. Spend a couple $100, $200, $300 to have them do a properly done, list, return. So this way here, they can also say, you know what? You should be also taking this over here. Or how many miles? Here's a good one. How many miles do you drive for your business? You're like, well, I don't really drive for my business. Well, let me ask you this. Do you drive to Staples to get office supplies? Do you drive to UPS to drop off some packages? Any of that stuff, that's mileage that you are running for the business. So did you know this? At least for me anyway, in the good old state of New York, but I believe it's just anywheres. Again, I'm not a legal accountant or, tax preparer or anything, but for every mile that you use in business, I believe it's like 55 cents a mile. You should, to select an attorney and accountant on your business. Yeah, that's a great thing. I gotta block someone here. So, you know what I mean? Like, you know, it's huge when they can give you these types of things. Like, I never would have known that. Now, you're not going to want to go and try to fudge this and try to like make up mileage. You know, literally just keep a track of that. You know, keep a sheet in your car or on your phone, and just, you know, how many can you write off? You write off as many as you are running, you know, legitimately, right? If you're going, I've driven almost 20,000 miles this year. Yeah, you've driven that, but is it all for business, for your business? Okay, not for your company's business, for your business. Okay, if it's for your business, you can write that off. If it's 20,000 miles, man, you know, definitely talk to your accountant on that. But that's a lot of money, right? 55 cents per mile, I believe it is. It could be more, it could be less right now, but that's what it was the last I checked. Sourcing trips. Oh, yeah, totally. Sourcing trips, that could be hotel. That could be food. That could be entertaining your clients if you got any there or whatever. Or you can write off gas for the business purposes. Yeah, I think they go more for mileage, but I'm not 100% sure. 57.5 cents for 2015. Thank you, Chris Schaefer, for doing that for me. So that's huge. That's a pretty big thing here, right? I mean, so take that, all right? And that wasn't even in here on my that wasn't even in here. I was told it caps at 6,000 miles. I'll figure it out when I hire a CPA. Yeah, hire a CPA, and that was my next thing. Okay, so the very first tip is get an accountant or get a CPA. I've had an accountant. One of my friends. He wasn't my friend in the beginning. He became my friend after being my accountant. I've had him for 15 years. This past year, I've kind of looked into the CPA thing because I wanted to, be able to, really kind of like take advantage of becoming an S corp. If you're making over, I believe it is like 45 or 50 grand, it might make sense for you to create an S corp outside of your LLC, not just an LLC. Again, Josh Bowerly talks all about this in the podcast episode that we just recently did. So definitely check that out. Difference between the CPA and accountant. A CPA technically has to go through more testing, and he has to have, I think every year, 40 or 50, maybe even more hours of training in like the new updates and stuff. I don't believe a public accountant has to. I'm not 100% sure on that. But I know a CPA generally has to go through more training and more qualifications because they do higher level stuff. Like they do more upper level business stuff. Now, sometimes locally, you're going to find CPAs are going to be very, very expensive. And that's why I would definitely recommend reaching out to Josh, and he can even guide you down that path. What happens if you don't make any profit? Well, if you're generating money, but you don't make any profit, you don't pay any taxes. And if it's legit, that's legit. A lot of businesses, most businesses in the beginning don't make any money. That's why for me personally, this Amazon business was like a test. And then the first year I was able to generate a profit, right? So I was able to generate over $300,000 in sales and then also pull about a 35 to a 40% profit from that business, which is crazy, right? So most businesses lose money their first year, 2, 3, even up to 5 years. That's why it's so hard for businesses to succeed over time. All right, so let's go on to second tip. Can I lower my personal income tax by the losses in the business? I'm sole proprietor. I don't know the exact answer to that, but I'm pretty sure you can. And again, I would talk to the personal accountant on that, but it would basically work off of that. Like your business is going to generate the money, and then it's going to internally come back to you. I sell over $50,000 a month and make sure I don't profit with 40%, and not sure I don't profit with 40% margins. Yeah, I mean, if you're making 50% or $50,000 a month, you're close. I would hire an accountant or a CPA if you don't already have one, and have them kind of go through that with you. You're at that stage though. Okay. Yeah. You know what? Just reminded me too. Andrea just shared this on Twitter. If you guys would do me a favor, share this if you think this is helpful, or anybody that would want to even tune in from time to time and learn more about Amazon and just selling online. Can you make a big inventory purchase? No, that's a great question. here's the deal with inventory, guys. Even though you put out 10 grand in inventory, you can't write that inventory off as a deduction until that unit has sold. Okay? So if you have inventory on the shelves, that inventory is not going to be deducted. So the easy way that I do this myself personally is I don't take that deduction for that money spent until that item is sold. So if I sold 1,000 units this month and they cost me $5 a unit, that's when I'm going to take the $5,000 off, okay, as a deduction. And then my inventory, I don't have to worry about saying, well, I have this much in stock. So let me see here. Got a lot of people I got to block today. Crazy. So that's pretty much tip number 1. Okay. Hello from Germany. Okay. The next thing is, I just recently did this. I just bought a new computer. Computer is my business computer. I use it for business. Guess what that is? It's about an $1,800 deduction. Okay. So, if you're in the 30% range, you're able to now write off, let's keep it simple. Let's say $2,000, or let's say $1,000. It's easier for math. So you got $1,000. Can you deduct Amazon's FBA monthly fee? Absolutely. Okay. So let's say, for example, you bought a computer for $1,000 and you're in the 30% tax bracket. It's like getting that computer for $700 because that's $300 you're not going to be paying in tax because you're able to take that $1,000 deduction. Does that make sense? If that makes sense, say yes. Just so I know you guys are there. I see a lot of the tapping going on, though, and I love that. And you guys can always share by swiping on the screen and clicking share. Yes, it makes sense. Cool. Awesome. Great. Yeah. So, again, right now, like in the next the next day and a half, I'm thinking to myself, okay, what else do I need in my business that I could buy right now? Obviously, you need the money, you can't just go out and put a whole bunch of money on the credit card, which you can do that. Again, that's another thing that was told to me by my accountant. If I buy something and I put it on a credit card, I can technically use that as a write-off. Now, you can't go and then return that item and then you took the deduction, but now you don't have it. You can't do that. That's like illegal. But yeah, if you buy something on a credit card that is tangible, like a computer, and you didn't pay for it technically, but you got it on a credit card, that's technically still a deduction according to my accountant. Now, it means a new computer today. Oops, sorry about that. Yeah, so anything for office chair. You need a new office chair? Buy an office chair. You get $100, maybe $200 deduction, right? Boxes, labels, markers, definitely all that stuff. That's a great point. Even though your inventory that you're buying like today, like let's say you spend $10,000 in inventory, but you haven't sold it yet, you can go ahead and, or you can't go ahead and write that stuff off until that stuff has been sold, right? But here, my BMW, I don't know about that. But here's the thing. If you have markers, if you have office supplies, paper, if you have, paper clips, all of that stuff, so you can go ahead now and write that stuff off, right? Because that's an actual physical office thing, right? So yeah, if you need more paper for your business, yeah, buy it now, and you can use it next year. Home office. Okay. That's what I'm going to get to. Okay. So we talked about, hire an accountant. Okay. Yes, you cannot write off your inventory until it has been sold. Exactly right. Okay. Now, accountant, CPA, definitely, I would say get that. Okay. Now, new computer, office stuff, that stuff, definitely can write that off. Okay. Home office. Okay. This is tricky. Okay. How big is your office? Let's say it's, 12 by 1,244. Let's say it's 200 square feet. Okay. Now, out of your house, you have to figure out your total square footage of your home. And then you need to figure out how much of a percentage is of your office. So let's just say it's 20% of your home. That's what the space is. Technically, 20% of your electric, 20% of your phone, 20% of your cable, if you use it for your business, I say Roadrunner, high-speed internet, all of that stuff. They also have a flat deduction on that now. Okay. I'm not sure about that, Chris. But yeah, you can use all of that as part of your home office. So garbage, you got garbage in your office, right? 28%. Well, at least that's what it was. I'm not saying that, but let's just say that it's 20%. So 20% of your garbage bill for the year, write off, right? Because you have to throw stuff away, right? Yeah, pulling your reports on Seller Central as close to midnight on December 31st can also help. Yeah, you'll be fine. I've used home office for 10 years, no audit. Yeah, and that's the other thing I want to point this out. Chris Bowerly, and I'm nervous about this as well. Like, I don't want to be audited. Who wants to be audited? He said it's very rare to get audited, especially if you have, a public CPA or an accountant doing your books like that. So he said the chances of getting audited, an actual physical audit, is really rare. I got to switch hands, guys. My hand is getting like it's turning numb. You can almost bet that won't happen. Now, and he said this too, they will most likely never call you. Okay, they'll never call you on the phone and say, hey, we want to come and audit you. They're going to send something in the mail. And usually with that, you'll be able to then almost like give them the information through mail versus them doing like this intensive audit. But let's just be honest here. If you're doing stuff by the book, you're going to be okay. But that's why having a CPA or an accountant or someone that does this stuff on a regular basis is definitely going to be worth time and money spent. And like here's the other thing. When you hire an accountant or a CPA, write off. Not this year, but next year. And here's another thing too. If you guys are doing quarterly taxes, this is pretty important here. This is another tip I didn't even put in here, but it's a pretty big tip, and I'm actually doing it today. Let's see. Yeah. There we go. So can you see that? Yeah. So New York State tax. I'm going to pay my New York State estimated tax today. Why? Because I can use that as a write-off on my 2015 tax return. So if you are in a state that requires you to pay state income tax, if you file that before the 31st or, by the end of the day on the 31st, that's technically a write-off, a deduction for 2015. Okay? So that's another thing that my accountant and my CPA both said is file that before the new year, and then you can use that as a write-off as well. Okay, so you definitely want to hire a CPA or an accountant to do this stuff for you. But just some good practices. Let's see. Sometimes a mileage deduction for a W-2 employee flags on IRS inquiry for your return. I don't know personally if that's the case, but if you have mileage and you're legitimately using it for business, I don't see a problem in it. I'm going to try to do as much as I can to be able to, benefit myself with all of the hard work that we've done as our own businesses, right? Why not take what's coming to us? Charity. If you've given to a charity, that's a write-off. You're giving away to Salvation Army. Clothes. Let's say it's $500 worth of clothes. That's a write-off. So all of these little things that you might not even be thinking of. Another one, once you get to a level where you have a surplus of money, you can go ahead and then create something they call a SEP fund. At least in New York, they're having this, and I believe it's nationwide. It's a SEP fund where you can actually take money, put it into an IRA, and then that's a tax deduction. So here's how that would work. Let's say right now I'm in the 30% tax bracket. I would take that money. I wouldn't pay tax on that money. I'd use that as a write-off in a sense. And then from there, when I'm 60 years old, my tax bracket might be lower. Let's say it's 24%. Now I pay less money on that money. And as that money grows, I wouldn't be taxed as much when I pull that money out. Does that make sense? So that's another way that you can take some money that's yours and put it into something like that. Should I save my gas receipts? You could. I don't necessarily think you have to, but you could just keep your credit card receipts if you pay by credit card, highlight it, keep it in a shoebox. But for the most part, I don't know that they would go to that extent. Just make sure. Actually track the miles as you go. Have a mileage book. Yeah, that's what my accountant said too. A mileage book is a good idea. Because if they see that you're actually tracking it and you took the time to do that, it's almost like they won't even go any further. But again, I'm not even sure it would get to that point. The numbers gotta be showing a huge loss for many years, in my belief. So yeah, who really does that? I mean, personally, I don't do that. I don't track my mileage, but I do have a monthly estimate of what I go by, and I usually go under a little bit of what I would or what my accountant thinks that would be like. You're trying to abuse the system now, but like, what is your average? Like, what are you averaging a month in mileage? Now, if that varies a lot, then yeah, you probably want to track that, and then you can just give the total at the end of the year. But I'm a big believer of don't overtake what you have coming, but just kind of go a little under. Yeah, just estimate it quarterly would probably be a smart thing. So anyway, guys, I just wanted to pop in here, do a quick little scope. I know it's getting close to 2016. I know this is a pretty big thing right now. And yeah, hopefully I didn't have you guys go out and spend more money today on computer stuff and office supplies. Let's see. Yeah, I don't know much on that about IRS and an employee and having like healthcare and stuff like that. I do know that if you have your own health insurance, which I do, if you're spending money on healthcare for your family or for yourself, that's 100% of a write-off. So if you spend, and I mean, healthcare can be crazy expensive. So if you spend $1,000 a month on healthcare, that's $12,000 a year. That's $12,000 of a write-off. Just bought tons of stuff from IKEA to make my office. Awesome. That's great stuff. All right, guys, I'm going to run. Remember, go over to the podcast if you haven't been there already, theamazingseller.com. Would love to have you guys share this, swipe on the screen, share it on Twitter, share it on Periscope, share it on Facebook, wherever you hang out, wherever you think people would get value from this. And any heads up for your PLC? What kind of heads up? I'm actually going to have my CPA come on as a guest there pretty soon for those of you that are in the class. So that's coming. You're going to be able to ask him any questions about business entities and tax stuff. Got a bunch of stuff. I actually recorded a video this morning for the class, which is going to be going in there on product research. So yeah, I'm not sure. New things in the class. Yeah, they're coming. Chris and I just talked this morning, and we've got about 8 or 10 new lessons that are going to be going in there, a couple hot seats, a couple of key interviews coming up. So they're all going to be added here in the next couple of weeks. So yeah, stay tuned. And 2 more just now, Chris said. Chris is on. Awesome. So Chris, you got them done, right? Awesome. I love all the 2016 love out there. Tap it up, tap it up. If you guys are watching the replay, tap it up, double tap, or as Papa Volker would say, my dad, quadruple tap. Definitely have a happy, amazing New Year. If I don't speak to you beforehand, I'll try to connect with you guys before the New Year, though. But if not, let's have a toast. And maybe that would be cool too. Maybe I could do a quick Periscope that night and do a quick toast. Maybe we could do a toast together. The CPA podcast was important and right on time. Thanks, guys. No problem. Keep garlic pressing on. And we actually, one of the research videos we did for the class was on a garlic press. So pretty fun stuff. All right, guys, gonna head out. Thank you very much. Have an awesome day. You guys are awesome, amazing, and I appreciate each and every one of you, and I'm wishing the best for you. And yes, what do you guys have to do between now and the end of 2015 and 2016? What do you have to do? I see a lot of you already saying it. Take action. All right. So have an awesome, amazing day, and I'll talk to you guys real soon. Peace. Love you.